welcome to my daily market report. My name is Mike, and this market report is about mortgage rates, what impacts them on a daily basis, the trends that they're moving along, and some outlying factors that can go into rate changes that we see on a daily basis. Something about myself is I am a loan officer. I do work with a mortgage lender. So if you're looking for any information on mortgage rates, if you're looking for information on mortgage programs, looking to get refinance or looking to get pre-approved to buy a property, please feel free to reach out. I'm here to help you as best I can. So without further ado, why don't we jump right into it? We got the big economic report that we've been waiting for all week, and that is inflation data on the consumer level with the CPI report. This is kind of a big one. So we'll start off the month over month for the headline number, CPI or Consumer Price Index. And the last report came out pretty high at 0.6%. However, forecast come for a pretty low number at 0.2%. It came in much hotter at 0.8%. Now, when you look at its annual rate, we were at 2.6% year over year. Back in March, forecast called for a jump of 3.6, and it well exceeded that at 4.2%. Now, when you strip out the volatility of food and energy, we get what they call the core CPI, and that's really what the economists look at because it gives you that baseline. Those other variables are the things that are uncontrollable. We can't control those due to different circumstances from nature and everything else. But so its month over month went up in March at 0.3%. Forecast is calling for another 0.3% increase, and it jumped up 0.9%. Now, its year over year was at 1.6%, and most people are calling for a 2.3%, which would put in the range of being a little concerned that we're basically at the level that the Fed wants to be at. However, it well exceeded that to 3%. Now, the Fed keeps saying transitory for these. The problem is a lot of people don't think it's going to be transitory. They think it could stick. When you go out there shopping, people are buying things. People aren't arguing. People are kind of seem to be accepting it. These are some of the different different people going out there talking, and people paying and kind of accepting the higher prices. And this is something that even if their wholesale side prices come down, it could kind of stick. So again, it may not be as transitory as the Fed may be thinking, and a lot of investors are kind of on the edge about inflation being on the transitory as they try to say it is. So let's jump over headline news. As a result, stocks are way down. Stocks have been kind of really on the edge about talk about inflation. And this, as I mentioned yesterday, if I said it goes above 2%, we might see a free fall, and it is plummeting right now. We do have a few Fed speakers are talking. There's some of them. There are some that kind of made comments about the inflation data that we're seeing today. Some of them continue to say they're looking at jobs and that this isn't transitory, but we're also hearing that some of it will be transitory, some may not be transitory. Different things, different comments like that. So let's jump ahead to what's affecting mortgage rates today, and mortgage rates are plummeting as well. They are. I see we had after touching this 100-day moving average, we've been working our way down. Now we're down below the 25, and now touching the 50-day moving average. We're down 33 basis points, so that is a big spike to our rate. So mortgage rates did worsen by a bit today as a result. So here's yields. Yields spiked higher, just skyrocketed, testing a new level at the 169 level, just right below it right now at 1.68, but it did test it a little bit earlier today, breaking above, as you can see, it's 50, 25, and the new technical right here, all the way up to a new technical. And this is kind of the high we saw a while back, kind of reaching this level, and we'll have to see if this sticks because inflation is a big concern. Nobody really wants high inflation right now. We hadn't seen that since late 70s into the 80s, where we went to double-digit interest rates. For the first time and only time in our history, we saw double-digit interest rates. So we hope not to go to those levels again. So anyways, again, mortgage rates did did worsen a bit today as a result. And if you guys need anything, got any questions or anything I can assist with, please feel free to reach out. Otherwise, you guys have a great rest of your day, and thanks for watching. We'll see you in tomorrow's video. Bye-bye.